like we said, for consistency, there's three pillars. There's strategy, there's mindset, and there's risk management, right? We have been focusing on strategy a lot, and for good reason, and the strategies that we have are very, very good. Once again, just opening up the scalper, right? Every single one of these trades hit. It's doing well. So even today, when we'll be talking, about mindset, about emotional management, we'll have the bot just open here so we can follow those trades. But this is something that we can basically do every single day. But yeah, there's three pillars to a strategy, which is to consistency, which is strategy, mindset, and risk management. Strategy, we cover a lot. There's hours upon hours of content about that we've done already. We talk about it a lot, and we use a lot of strategies that are good and that are consistent and that successfully fulfill the first pillar. So what about the other two? Well, the other two actually something that people don't really think about. Now, the risk management pillar, yeah, we look at where our stop losses are. We make sure that we never risk more than 10% of our account, all of that, right? So the theory of that risk management aspect we understand as well, or we've been at least talking about it, and there's a lot of content that we've been covering. The third pillar, though, the mindset pillar, is something that I have seen over the last couple days and weeks, that is something that many people lack, and that is the one thing holding them back from absolutely exploding in their trading career. And you can call that many things. If you had to put it into one word or one term, it would probably be revenge trading. But that's just an effect. That's just something that happens because of the core problem that is there, right? That's just a symptom and not the actual disease. So the problem with risk management is, and this is what the market is based on, right? At the beginning, right, when you're trading, let's say you're trading, you're doing well, and then either you have a bunch of consistent wins, or a huge win, a bunch of consistent wins and then a big loss, or a huge win and then a bunch of losses, and overall you're unprofitable, right? And you're unprofitable over and over again, and you just you see it working, but your bank account tells you otherwise, right? And that is the limbo that 99.9% of people are in when trading, because the market is designed to be a casino, and the market is designed in order to do that. So there's a constant outflow from your bank account into the market, so then other people that understand it can utilize that and have a constant inflow. That's just how it works. That's just the reality of it, right? So when we talk about mindset and when we talk about revenge trading, we need to understand what it is in the first place and what triggers us to revenge trade. And really what it is that you have a lack of understanding of what you're doing in the first place. And that comes down to the core principles of understanding why you trade in the first place. And you might think it's because you want to make money, you want to quit your 9 to 5 and so on and so forth. But that reason subconsciously might be different. And that's something very important to understand. And also what I've seen from talking to a lot of traders and just watching a lot of traders in the past years, revenge trading and emotional trading, and the issues with that usually tend to happen with younger people, and then older people usually have more emotional control, where it doesn't happen as often, right? And you can see, and this is the temptation that gets most people, which is that you have the math is there, right? We have our calculators and everything, and we see how big of an improvement or how big of an account growth it is if you just improve or if you just make 10% a day, right? The compounding is insane. $1,000 after 60 days is like 300 grand, and after another 60 days is like, I believe, like 100 million or something like that, if not more. So the thing is that yes, that's true, and the math is there, and if you did do 10% every single day, that's what you would do. However, you need to make 10% every single day, not 10% every single day for a week and then blow the account. Then obviously the math does not work. And because there's such a long period of time where you can fail, if you don't have the mindset right, and really all three pillars, but usually, especially right now with the overall trading level that our Discord has, the biggest losses of our overall equity in the Discord is due to the mindset pillar. So why do you revenge trade and how does it work, right? So really, we need to understand how it works. And paradoxically, because you're in this Discord, you are actually tending to revenge trade more. And I'll tell you why. Because we have the three pillars. We talk about risk management and we talk about strategy. The strategy that you get, usually, that you trade, as long as you trade our strategies, they're really, really good. Meaning that they're very high hit rate. Usually they're right. And they have good profits and good risk to reward ratios. So as you trade them, even as a beginner, and that is the most crucial part, is that when you come in, and that's why I tell everyone, when you come in, at first, just do demo accounts. Just do demo accounts. Even if you see it working, still do demo accounts, because you're not ready until you blew the account at least once in a demo account, until you saw losses in your account due to mismanagement. Not the strategy. When we look at the strategy, I mean, the strategy is doing good, right? You just have the strategy, auto trading, we don't have to talk about anything. But we're manually trading it, right? So the problem is, okay, so we're manually trading it, and usually the strategy is right. However, it's not right all the time. We know that there is a hit rate that the strategy has. We can take the scalper, for example, right? Most of these the trades that it does is good, and somewhere you'll find a loss, I'm sure, when you look hard enough. So and as you do, that's completely fine because it's part of the strategy, and including the losses, including the stop losses, including great and horrible trades, in the scope of the strategy, we have a good result. We put this on deep back testing here for longer, we'll have a good result, right? So that's not the problem. The strategy isn't the problem. But when we trade the strategy, and the strategy is actually better, it's more dangerous when the strategy is good. Because when a strategy is good and you trade and you say you have a good streak, you have 3 trades, 4 trades, 5 trades, 6 trades, a lot of trades, a chain of trades where you're just winning, you start, 170 grand. You start feeling like you're invincible. And when you're feeling like you're invincible, you are seriously disconnecting from reality. Because what is the reality? The reality is that, let's just take the scalper strategy, is right most of the time, and sometimes it's not. Usually the way it works is that when the price is in a range, it's just going to trade the range. So it's going to be right, it could be right 100% of the time in the range. It could, until it breaks out. And then it doesn't, and then, when it gets losses, it's probably in the pockets of time when the price moves from range to range. So, and that is literally the core of the strategy. That's why it's so profitable. That's how it works, right? So in the definition of the strategy, it tells you that you might have a long chain of winning trades without a loss. But that does not mean that a loss doesn't come. In fact, statistically, the longer your chain of your winning streak is, the higher the chance that the next trade is going to be a loss, exponentially. So if you have 10 trades that you won in a row, then the chance that the 11th trade is going to be a losing trade is very high. Not very high, but is higher, right? When you have 20 or 30 trades in a row that are winning, then the probability of the next trade being a losing trade statistically is exponentially higher. That's the reality. That's math. However, in our head, we do the exact opposite. The more we win, the more we think that we cannot lose. But the reality is that the more we win, the higher the chance that we will lose. The question is, what do you do with the loss? Do you let the loss be, a normal loss in the strategy and a predicted loss and an accounted loss and a normal loss that where the next trade you just keep going and the strategy just works as expected? That's option number one. Usually people don't do that. What people do is they disconnect from reality. They think that they're invincible because they've been winning more and more and more and more. But in fact, the chance that they will lose is higher and higher and higher exponentially. So once they lose, even if they just risk their normal amount, and once they lose, then they start revenge trading. Because when they lose, they think that they will never lose, or at least have the feeling. So they either over leverage or they just have a loss, and they cannot get over the fact that they just had a loss. So the next trade, then they try to just do a higher gain, or they over leverage, or they disconnect from the strategy because they have disconnected from reality before. So then when the when the loss hit in your account, if you say you risk 10% of your account every single trade, you're down 10%, fine. Your hit rate's like 80%. You do 3 more trades and the chance is like 90% that you'll be back and above the level that you were before. But you don't do that. You either have a loss and you either let the loss run instead of cutting it, or you enter another trade where that trade was actually not a good trade, where that trade is a bad deal and not a good deal, and we dislocate from the strategy essentially, and that tends to hit another loss. And as that loss hits, now we know, okay, well, now we messed up because we dislocated from the strategy, and now we're in a bigger loss of our account that we should ever have. So in order to fix it, we don't go according to the strategy. What we do is we try to over leverage more, and then we try to over leverage more, and then 30 minutes later, we'll look at our account and it's zero. And this is how common psychology gets you, with the fact that as you're trading and you're doing well, all you have to do is trade according to the strategy. That's all you have to do. But at some point, without even realizing it, you disassociate reality and your trading, and it's not connected anymore in your head. So as the strategy is working, you somehow expect that we will never lose, which is not the point of the strategy. The point of the strategy is to be able to apply that strategy to the market and in general have an edge over a period of many trades, have an edge in the market, and that way consistently take out money, take out profits. And you do that by playing your margins. And your margin is between what edge you have over the market and how it moves, right? So the question is, you will have a loss for sure. I guarantee you, if you're going to be trading for the next week, you will have a loss at some point, right? And if you don't, then the next week or the next week, there will be a loss. But why would you let that loss eradicate all the profits, all the work, all that winning streak that you had? If you would just accept that loss as a part of the strategy and keep going, you wouldn't even notice it. But because you take that loss and it becomes a big issue for you, what then happens is that you focus on that loss and you just cycle out of control immediately. So the more wins you have in a row, the exponentially higher the chances for a loss, statistically. So the question is, how big is that loss, and what will that chain of events result in? So as you trade, you need to stick to the strategy, and the second you deviate, it's an explosion. It's a circle. It's a self-killing circle that just spins out of control, and like before you even realize it, the account's gone. Because once again, we're in a deep blue ocean, right? No land around us, just dangling our feet in the market, right? With sharks around us, and the only reason why we don't get devoured within a second is because we know exactly how to move. And as we do that, we're fine, and we make money, and we're consistent, and everything happens what we want to happen. However, when we disassociate and we step wrong, or we stop believing that we actually need the strategy in the first place, you lose a leg or more, right? So, beautiful analogy. You fly too close to the sun, right? Because something's working does not mean that you're invincible. Because something's working means that it's working, it's good. So you need to be more disciplined than before and continue doing what's working. People get excited with the smallest idea or the smallest proof of the smallest success, and just get crazy about it. And while doing that, they fail on doing the thing that was successful in the first place, and they go right back where they were. You get it's like you get a suitcase with $1 million, and you're like, oh no, thank you, I'm actually fine. That's literally what you're doing. Because you find something that's working, and instead of continuing to do that, you do exactly not what you're supposed to be doing, right? So you see like there's 10 trades and they're going great. So, well, okay, logically, very simple logic is, if you just keep doing what you're doing, you'll be fine. However, you do the one thing that you're not supposed to do, which is stop doing what you're doing, because it works, right? And the thing is that if you misstep in the market, the sharks eat you alive immediately, because they're just waiting for that. That's how market makers make money, because they want people to, put the foot wrong, and then you're gone. You're just gone. And then you come back because it's a casino, and you like the entertainment, and you like the emotional thrill, which is not the reason why we trade. The reason why we trade is we want the most boring way on how to make money, on how to make a lot of money consistently. That's why we trade. If you wanted an exciting way, then, I don't know, be a sports athlete, or, do something, sign a contract with Red Bull and like jump out of space or something. Like, you can do that, I guess. So, like, that's exciting, right? Here, you want the most predictable way of making exponential money. The beauty about trading is that, unlike any other business, there's no fulfillment, there's no customer care, there's no warehouses, logistics, buying ads, none of that. It's just pure numbers and pure money out. There's nothing else to it. And that's great, because if the point is to make money, then this is the most straightforward way on how to do that. So don't overcomplicate it. Don't put stuff in that shouldn't be there, because once you do, And people love to do that. People love to overcomplicate things, and as they do, they don't even understand what's going on anymore, and then it's just a bunch of missteps, right? We have the strategies right. The problem that happens specifically in our Discord because of the success of our strategies is that we can think that we're invincible, whereas a loss can happen in a strategy that is absolutely accounted for in the strategy and a part of the strategy. And all we have to do is just continue to do what the strategy is telling us. That's it. We don't need to change anything. People think that when they trade a strategy and suddenly it has a loss, they need to change the strategy. No. The loss is there also in the back test. It's not something we didn't expect. There is going to be a loss. The loss is part of the strategy. If there wouldn't be a loss for a very long time, then there's something concerning, because something's going on not according to the strategy, not according to the backtest. If your win rate is the same as in your backtest, then that's very, very positive, because that just means that your backtest was accurate. And in that case, you should drop everything in your life and just do exactly what you're supposed to do with the strategy if you find that alignment. I'm over exaggerating here, but really the cleanest way to make money. So you do that, right? But somehow, out of our emotional brain, what we do is when something starts working well, we let it go, and we're like, think about it in a rational way. Okay, so I started following this exact set of rules, and this exact set of rules actually is working so well that I haven't been losing for a long time. So what I'm gonna do is something completely different than the set of rules. In fact, I'm gonna do something that's the one thing that I'm not allowed to do in these set of rules. That's literally the chain of actions that you do if you revenge trade. It's like, oh yeah, this works, but how about I will try and do the one thing that where it says that I'm not allowed to do. How about I do that instead of just doing what works all the time, over and over, and making money? Probably more exciting, but that's the thing, right? And I will keep repeating it over and over because it's important to get it in your head of what we're doing here, right? This is not an emotional roller coaster, neither should it be. This is a structured, clean way of how to take out money out of the market consistently. That's the point. Consistency is the point, right? The point is not to revenge trade. The point is not to change the strategy as we feel like it. If you find a strategy that is working and you stop doing what the strategy is telling you to do, and then you lose money, then there is absolutely nothing that, there is absolutely no reason for you to, for me to feel bad for you at all. Because you had it laid out there for you exactly what to do in order to be consistent, and you did the one thing, the main thing that you're not supposed to do, right? So then the question is, okay, well, why does that happen? And it happens because you get that overconfidence and you get that God complex, which is actually something, again, a core market mechanic. And really, it's just statistics. Like when you have a coin flip, right? Let's just say that your win rate is a coin flip. It's 50-50. So when you have a coin flip and you do it like a million times, then there's going to be a chain of coin flips where it's tails like 10 times in a row. It's always going to happen in statistics, right? However, the human brain will look at, because it's not able to zoom out enough, it will look at those 10 wins in a row, the 10 tails in a row or 10 heads in a row, and be like, oh wow, heads actually, like the coin flip ends up being heads actually most of the time, whereas it's perfect 50 over a million trades. But in your head, it's like, okay, no, like it might not be that way because of the last 3 trades that I did. So number one is perspective, looking outwards and understanding that it's a large period of trades. And then when it's going well, you need to be more and more concerned that a loss is going to come. And expect it. Don't be scared about it. Expect it. And every single time you win, and when you get into a win streak, just expect the loss and be ready that when a loss comes, you will just continue with the strategy. You will do nothing else. And if you bring that up and if you think about it in your head before it even happens, or after every trade, or after a good trade, it's like, oh, okay, I just had this huge win. That means that I'm one step closer to my next loss, which is fine. And when that loss comes, I will be ready for it and I will execute on it, or I will manage it exactly how I'm supposed to. I will have my risk management, and after that loss, I'll brush it off. I'll just keep doing what works. That's all I'm gonna do. And you'll be fine. However, the more wins you have after one another, the more your brain tends to forget the losses, because your brain likes to focus on the positive thing rather than the emotionally positive thing rather than the emotionally negative thing. So what's going to happen is that you'll be focusing more and more on the wins. You'll forget when the last loss was in the first place, right? And then you will somehow warp the idea of the strategy in your head, and when a loss comes, you're shocked that there's a loss. But looking at the strategy, the loss was going to come either way. In fact, the more you're winning, the higher the chance that the loss is going to come statistically. So expect it, be ready for it, and manage it the right way, right? It's about how you take the loss. Will it blow your account, or will you just continue making money with the thing that works in the first place? So those are very, very important things to understand, because there's so much work, effort, energy, theory, management, all of that. We've done all of that, right? We learn about risk management, we learn about strategy, we learn about all of that, and now all we need to do is execute on it, and we do. But then this one time when it's the most important, we drop the ball and it just spins out into a deadly cycle, right? So we need to be okay with the fact of seeing it minus 10% on the account, even if it's the last trade of the day, and just leave it there. Like, do not revenge trade losses, because losses are something that is to be expected. You don't make money in the market by being right 100% of the time. You make money in the market by having a logical or practical edge in the market, meaning that more often than not, you're profitable, you're right, and that is your win rates with your risk to reward and so on and so forth. And then you just repeat that thing many times. That's how you make $1 million in the market. You find an edge, and then you repeat that thing over and over and over again. And the beautiful part about it is that you're compounding. So, if you make $10 per win, that does not mean that you need to do it 100,000 times in order to make $1 million. Not at all. Because if you make $10 and you start with $10, well, then the next time you trade with $20. Then next time you trade with $40, and then you trade with $80. So the compounding helps you, and helps you get to where you want to go so much faster. So you have so many advantages already, right? So all you have to do is continue doing what worked in the first place. If it stops working, that's a different story. If it stops working, then it probably didn't work in the first place. You just caught a time where it, was half decent. But when you look at the strategy over a long period of time, it's possible that, it might not work at all. Or there are very, very specific times where it worked, or stuff like that. You're overfitting, whatever it is, right? But that's the strategy pillar. That's the strategy part. We're not talking about that now. Right now, we're in a position where we're doing pretty well with our strategy. So as long as we execute on that, we'll be fine, right? So the strategy pillar is on hold right now. We're looking at the mindset and risk management pillar. The risk management pillar, we looked at it, it's like, okay, well, we're layering our entries, right? We're looking at different confirmations for our trades. And because of that, we get good deals on all of our trades. So, our risk to reward is going to be good. So by default, there we're going to be fine as well. So we'll put that aside as well. The mindset pillar is a mess for many people. So on the mindset pillar, we need to understand, what are we doing? What's the point? How, really, what is the secret to making $1 million in the market? It's very, very simple. You find an edge and you continue doing that many times over. That's all. And everything that you do alongside that, other than that, should be to support that one thing. And then eventually you'll add in a second thing, you'll add in a third thing, you optimize it, you multiply your performance by 100x or something like that. All of that will come. But the first thing is to find something that works and continue doing that. And if you're changing it, you're not changing your strategy while live trading. That's crazy. That's like trying to build an airplane while it's flying. That doesn't work. It's gonna crash. It's like trying to change the engine of an airplane while it's, flying across the Atlantic Ocean. It's probably not gonna work really well. You change the engine of the airplane when it's landed in a hangar, ready to be worked on. So you don't change your strategy while you're trading it live. You change it by backtesting or looking at your live data, which is better than backtesting. Looking at your live data, analyzing it, seeing what can work, and then changing the strategy, going back to live trading or backtesting, and then looking at the performance, and then taking that data and come back to the hangar. You don't do it while you go and while you're trading, because then once again, it's just going to be a mess. So that's still the strategy portion, but the mindset portion is we need to understand what the strategy is. And while we're trading, all we need to do is execute on the work that we have done before. And your only measurement for success while trading is if you did what the strategy told you to do, more than if you made money. Because we can switch out the strategy. I can give you a strategy right now where you're going to be fine and profitable, right? Like right now. That's not the problem. The problem is that you do not execute on what you're supposed to do. And that's a problem because you're the connection between your bank account and the market. There's no one else doing it for you, unless you're auto trading. But we're assuming you're not. So you are the vehicle that transports the information between the market and your strategy that you've built on, right? So there's a time to build and create and try and test, and that's on that strategy part while you're building it, while you're backtesting it, while you're testing it. When you're executing in the market, you can take notes, you can take mental notes, but all you're doing is you're executing what previously you've been working on, right? You need to, it helps sometimes to split it into essentially two different people or two different characters, right? Where one is the engineer and the architect, and the other one is the construction worker, right? So, and you're both, by the way. So first, you engineer the strategy, the architect, you're the scientist, you test all of that out, and then you make a blueprint. And then you give that blueprint to the worker, and what the worker is going to do is exactly what's on that blueprint, nothing else. Or a soldier, you can, whatever you want to call it, right? That's, if you don't do, even if the strategy doesn't work, right? That's not the point. If you are live trading, you are the worker or a soldier or whatever you want to call it, and your job is to do exactly what the strategy is telling you to do. If you don't do what the strategy is telling you to do, and you end up being more profitable, you failed. You still failed because you did not do what the strategy told you to do. Why did you fail even if you made more money? Because if like that engraves in your head and you're like, oh, I didn't follow the strategy and I made more money, great. So now you're going to keep doing that. And if you take this situation and you look at it, you extrapolate it to 1,000 situations, overall, you would be in a deep red. Because even if sometimes it works, no, most of the time it's not going to work because there's a reason why the blueprint was there in the first place. And if there is a problem with the blueprint, that's a problem for the engineer and the scientist, right? Not for the worker and soldier. The only problem of the worker and soldier is, do we execute exactly what the strategy is telling us to do? So that is probably the main thing. And looking at it this way and segmenting your strategy with your execution, first of all, makes it more clear where the problem is, which most of the time is going to be your execution, at least in our case in this Discord. And then when that happens, like, okay, well, why did the worker not follow the instructions right now? And the answer might be because the worker got all excited into doing its job, where it actually started deviating from the blueprint and did not stop reading the blueprint. It was just starting to, look at, just fantasizing over, probably looking up Ferraris on Google or something like that. Whereas, yeah, sure, you can get that, but you get that by following the instructions, not by just going into La La Land and, dreaming. That's how I say poor. That's the difference. Instead of executing on a plan that's already sound, you fantasize and you don't execute. So the logical reason there is or the logical effect there is that you're going to lose. So, that is something very important. And I feel like this by itself is something that you guys should think about for a while. So I don't even want to add in other information, look at trades, look at strategies and so on, because this call is just going to be about the one pillar, which is mindset, right? And which is understanding why, first of all, not doing it, and second of all, understanding why you did it in the first place, right? When you have a good strategy, that's great, but you need to understand that if you have a good strategy, think about it this way. If you have a good strategy, you're more dangerous to the market makers, right? So as you have a good, and psychology just helps with the natural outcome, which is that you get more and more excited and you feel more and more invincible because you have 5 wins in a row, 6 wins in a row, 7 wins in a row. And somehow, like if you look at the backtest, if you look at your past live trading data, you know exactly that a loss is absolutely part of the strategy. And, a complete, like, that's great, right? It just means that the strategy works as it's supposed to. But as you keep winning, somehow you start feeling invincible and start feeling like, a loss is never going to come. And then when it does come and you're surprised by it and you're shocked by it, that's a problem. Because then you either mismanage the trade that would be actually very, very easy to manage that loss. because we do it like a million times in back tests and a million times in everything else, right? So it's actually very easy to manage, but we don't manage that because we either let the loss run for more than we need to, or we lose, we hit our stop loss that was planned out, that's fine, but now what keeps happening is we go in with more leverage on the next trade because we want to make it back right away. We don't want to wait for a couple of trades. We need to make it back right away. And that's when the problem happens, because now you are not following the strategy, meaning that the trade will, there's a much, much higher chance that the trade is not going to work well because, first of all, you had a chain of wins. So statistically, the chance that there's going to be a loss is much higher. And then second of all, you just entered a trade that's not as good or would normally not adhere to our standards, and you still enter it, and you enter it with larger risk. So the chance that you lose that is much higher. And if you lose that, well, then it's just a free fall from there, because then you just try to, at that point, like, okay, I just lost like 60-70% of my account. At this point, it doesn't really matter. I'm just going to 100x, and then that's good night. And that's done. And then the fun part is that you come back with another account. And then the even funnier part is that you'll do it again, the same thing, right? So you will keep doing that as long as you don't understand the fact why you do it in the first place, and understand the fact that there's 3 pillars. Like, I want that engraved in everyone's head. There's 3 pillars to consistency. It's strategy, it's risk management, it's mindset. Strategy, we covered a lot. There's there's a lot of strategies in the Discord that are working well, so we don't even have to think about that right now. Risk management, layering orders, setting your stop loss, not risking more than 10 or 5 or 3% of your account, stuff like that. That's risk management. Mindset is your mental agility and discipline on executing all the work that has been done already. So that is something very important, and that is something that that many people can fail. And the thing is that in that situation, you don't fail a little bit. In that situation, you fail absolutely, which means that your account is gone. So, and I talked about it with Hubert today, actually, where there's like, I want to, like, every time I see that someone blew their account, I blame myself that I didn't make it clear enough, because that is literally, especially for new traders, it's the default, right? So please don't trade real money until you have full control over your trading and over your mindset and over your emotions, and also understand what the strategy is doing, and also understand the risk management. And you need those 3 pillars before you even put a cent into the market, because you will be devoured. You'll be a snack. So that's why it's important to understand that. And if you have how to do it is simple. Take a strategy that works, understand why it works, and just do it. Take something that works and just do it many times over. That's the same way of how you make money in sales or in any other business. Take a product that sells and sell it to many people many times. That's the equation, right? Obviously, and that's the beauty of it. In other businesses, you have fulfillment, you have many other things, and so on and so forth. You have customer service, you have the market doesn't text you and wants a refund, right? That doesn't happen. In the market, it's just pure cash in, cash out. The disadvantage, or the other side of that, is that you need to put in your money in order to have the chance of taking money out. And there, people don't understand the weight of that, because once the money is in, you need to be extremely careful and extremely professional about the fact, because you put the money in and you might be fun for you, but on the other side of that exchange, there's an institution that is managing billions of dollars, and they can't just lose $1 billion. They would go to jail, and many things would happen, right? So they they cannot just, lose something that quickly. So they're professional about it, and they're in the same proximity, in the same ocean. They're swimming in the same ocean as you. It's not like a different playing field, right? It's not like in sports you have different leagues, like a AAA league or something like that, where there's kids. They're not gonna play against, an NFL team, obviously, right? In the market, you do. Like you can be a high school kid that just trying out the sport for the first time, and your opponent is Goldman Sachs or BlackRock. That's literally the reality. So and obviously we cannot compete against them. So what we do is we find strategies and we work on strategies that work as a benefit to market makers, or as a symptom of market makers, and something that just happens over and over because of that, and we utilize it and we make money on that, right? But the thing is that if you misstep, meaning that if you don't follow the strategy, if you don't do where our edge is, then BlackRock comes and picks you up and just eats you for not even a snack. Like, it's nothing for them, right? It's just gone immediately, that money. So that's why it's so important to understand the weight of that. I feel like there should be a larger respect to losing, to blowing your account. There should be a bigger fear from it, actually. And there isn't, because it's so easy to just do, and it's more fun if you risk more. But that's not the point of this Discord, really. And we talked about it with Hubert, and really is like a good thing that what we're starting out now, and it's probably going to launch in a couple hours, but in a couple of days we're starting our prop challenges, and there at least you have a limited downside with a very high upside, right? So when you trade there, then the maximum you can ever lose is the challenge fee. However, what you can win is, first of all, a funded account, and then you trade with thousands of dollars and you can win more. But even then, when you trade with thousands of dollars, if that doesn't work out, you only lost your initial fee. So that is probably a very, very healthy way to risk manage, right? But then again, you need to be able to trade consistently, because if you lose on a live account, then you don't carry the losses, but the prop firm does, which, like, I don't want to pay for your dumb decision. So the thing is that everywhere the three pillars are crucial to consistency. And the good part is that if you have those three pillars, you don't need anything else for consistency. So you have a strategy, and honestly, we don't have to think about strategies that much, because we have a bunch right now that are consistent. We have the risk management, which, by just understanding how it works and layering orders, and you'll be fine. And the mindset now is like probably 90% or 95% of the losses in the Discord. And I don't mean like casual losses when we lose like 2, 3, 4%, but the big losses that eradicate accounts are because of mindset, are because of revenge trading, are because of feeling overconfident and feeling like we will never have a loss, which is very, very far from the truth. In fact, the more wins we have, the higher the chance for a loss. So, and we will be talking about this more, much more. I think that I hope that this made it a little more clear about mindset and how we, make sure that we execute on the strategy that has been laid out already, rather than starting to deviate because our mind is playing games with us. And that is literally what's happening. And that's why we get devoured in the market. I don't, but people do, and that's the difference. So, that has been all I wanted to say today. If you guys have any questions, let me know as always. And if there are no other questions now, that was it for me, and I'll see you guys